All right, there we go. Hey there, everybody. Good morning. Happy Monday. I hope you guys are having a good trading day so far. Hey, Chad, Baby Bear, great to see y'all. Ari, you as well. So today we have basically open flat, right? We haven't seen too much happen, unfortunately, in this market. We have not been able to really go anywhere ever. And so we're basically stuck, could be stuck at this point, is because we do have big names of earnings coming out this week. We have Google, we have Microsoft, we have Amazon, we have Meta, and those, of course, make up bigger components of the market on top of other companies' earnings this week. So I, I hate to say that we could potentially be seeing a bit more chop going into those news events, right? Kind of digest how they did on their earnings, they do really well? Does the market react positively to it? Or do they end up disappointing the market where we see it drop back down? That's certainly a possibility. But for those of you guys who have been listening to me for a while, then y'all know that I'm already cautious about this starting to turn into a market like we saw in 2015, 2016. For those of you who recall trading back then, it was basically a flat and consolidating market. It helped at the time momentum reset towards that zero line. We built into a great monthly squeeze. Um, but before we saw that squeeze fire and really take off, unfortunately, we were just stuck in overall consolidation. It was a very tight range for a bit, got a little blip down to support, but for the most part, we stayed in a pretty narrow range back here and did not get that much movement. Now, our range might be a little bit wider currently because we are trading at basically twice the level. Back in 2015, 2016, we were around the 2000 range. Currently, we're around the 4000 plus range. But you can already see that's kind of what we've started to get into, certainly this year. 3,800, really since the end of last year into this year, 3,800's been a pretty good price support level, whereas 3,200 has been acting as price resistance. And we find ourselves just chopping currently within that 400 point range. So as much as I'd like to think that earnings could be what the market's waiting on to kinda get a bit more of a trending move, whether that's up to break weekly resistance around this 4,200, 4,260 range and move higher, or whether that's to respect resistance and move back down towards support levels, right? Hard to say at this point, certainly. But I'd personally, of course, love to see that trending move. I'm a little cautious whether or not we're going to get it because if y'all recall, right, earlier this year, I was like, maybe CPI will give us that bigger move. And we had some good daily ranges around the announcement and around Fed, but we didn't actually really move anywhere, right? We kind of stayed flat, had a little bit of a run up here to get us into our current consolidating range that we're stuck in now. But in regards to a really strong trending move, we just haven't seen that yet. And then certainly we can take a look at PLTR here in a second. I'd be happy to do so. Really quick though, let's talk about the trades that we've done in the $500 challenge. And then if we have any time, I'm happy to go into last minute requests. But just to round out this thought on SPX first, basically, I would not be surprised if today was another choppy day. Most of those news events, starting with Google, I believe, is tomorrow. So it could just be that we kind of take a breather this Monday and then get a bigger move, ideally, starting tomorrow for the remainder of the week. From the intraday charts, you can see that we're holding the 30 as resistance right now. Did start to break the 10 as support, but from what we saw both on Thursday and Friday last week, the 100 period simple did a really good job of holding that support level. So be mindful of the chop still in this range. If we do finally manage to break below the 100, which is currently at 41.20, then our next target would be the recent lows at 41.15, so not that far away. But then, of course, if we can't break that, the bigger target to the downside would finally be going back to test that 4100 level. If instead we manage to bounce back up, then kind of similar to our support levels, just above the 30 period simple around 41.40, which has also been a price level the past week, is 41.50 as a psychological level. And then the ATR trailing stop just slightly above 41.60. So be very mindful of your levels, be mindful of the chop that we've really seen this past week. If you're planning to do some intraday trades, you might consider more consolidating style trades like credit spreads to kind of benefit from the chop and not need as strong of a directional move in order to be profitable versus something like a long call or put. But that's what I'm currently seeing. And then, of course, this hourly squeeze is just still building into itself. I would not anticipate it unless something happens. I wouldn't anticipate it firing today. So I'm anticipating more of that chop. And then maybe tomorrow, once we start to get some earnings events like Google and Microsoft, it might not actually be until Wednesday because I believe they announce after market close. So might be about 2 days of chop, and then we get that movement starting to pick up Wednesday going into the end of the week. Um, and so that's what I'm seeing right now for the market, very flat. So be mindful of the strategies that you choose as well as the risk that you're putting out there in this chop. And yeah, Chad, I agree. The chop that never ends. It's it's basically it. You can to the song. Let's go on now. So let me pull up the $500 challenge account over here. So right now, the only trade that we're in is SPX. For those of you who have been following since the start of the challenge this year, then y'all know SPX is based off of a longer term quarterly signal. That's why the expiration is all the way out to June 30th. And this quarterly signal, certainly go back and check some of the prior videos where I explain it in much more detail. But in short, the quarterly signal, every time it's printed in the past, means that we've seen a stronger follow through to the downside. So what we did is we set up a broken wing debit butterfly with our long strike at 3,500, right by the lows of last year, around 34.91, if I remember correctly, was the low of last year. And that way, if the quarterly signal follows through the same way it has done every time in the past, we know at some point this quarter we could see a stronger move. And so we have this trade set up in line with the lows of last year to try and participate in that. And obviously, it's down right now because overall, we have seen a little bit of a move higher at since the start of the quarter, but really we're just consolidating. And of course, consolidation doesn't benefit a directional trade like we hold. And so we really need to see that movement occur. But on these quarterly signals, sometimes it doesn't follow through the first month. The first month can be kind of choppy. And then from there, we get a bit more directional move the second and third month. So I would say the signal is still valid at this point. At the same time, the signal, this might be the first time it never follows through, which is why no matter what, we control the capital risk that we put out there. That's currently where we're at on that trade. So not taking any action, just sitting tight and holding it. And we'll see if maybe earnings is the catalyst for the start of that selling. The only two other trades that we've done so far in the challenge, just because, like I said, I'm much more a directional trader, so I like to see those moves, and we just haven't gotten any as I'd like to see this year. Apple is the first one. Apple, for those of you who recall, we jumped into this trade just looking for a bounce back up into price resistance. And so we did end up getting that towards the end of the week. Here was where we trade. We were just looking for a move back up into this range, maybe a run higher into earnings. And it took until Thursday, but Thursday gave us that bounce up and allowed us to take a quick profit on this. So we were in it for 52 cents, 105, ended up with a 53-cent profit. The next trade we jumped into was a very similar trade idea based off of Google. It had a bullish divergent bar, which gives you the probability of following through with a higher high. It too was trading down here with earnings, of course, coming up this week. So the idea is we might get a bounce back up into the top of this consolidated range, potentially get a run up into earnings to be able to take the profits that way. But unfortunately, unlike Apple, the 10 period simple proved to be too strong for Google and it continued to hold as resistance into the end of last week. So that one we took a small loss on, basically a scratch, right? We're down about $4 in total between those two trades. And then, of course, last trade we hold is SPX. So I might consider an earnings trade if we can find something that's cheap enough. For those of you in the Profit Recycling Mastery, you'll recall we did an earnings trade on Tesla last week that worked out very nicely. Certainly took mine off for the quick win, but you could have held it into the end of expiration or, of course, very close to it. Don't want that risk of assignment for your account unless you can handle shares. But it basically went close to max profit potential because it was hanging out by the pin. So if there's thing within the cost base $500 challenge account that makes sense where we're not putting the full account at risk, but can still set ourselves up for a nice reward, I might consider doing that. Otherwise, though, I'll continue to scan for trades. And given how we're seeing the chop in the market this week, those bigger earnings coming up might not be until later in the week where we start to find maybe a bit more of a directional trade to be able to take advantage of for a low risk, but a really great profit potential. So I am keeping an eye out for those. But as of right now SPX is the thing we then let's pull up PLTR because that's about here. So for PLTR, there we go. Unfortunately, like everything else in this range, it's doing overall a pretty good job holding the 100 period just around what is that, 760, 769. The ATR trailing stop is currently holding as resistance. That level is at 887. And it's kind of just stuck in between that. Um, then I'm not sure what the good news was this morning. To be quite honest, what I have found typically on the charts, the technicals usually give you a proper setup, and then the catalyst ends up being the news, right? The news event for the move itself. But the technicals usually already clue you into that possibility before the news even comes out. And so I guess I'm not sure what news came out today, but I'm guessing it didn't really seem like a non-event. It's for the market. Maybe it was already priced in. Um, but even going into that quote unquote news, there wasn't much from a technical standpoint telling you that we could start to really see a rip. We do have a great squeeze setting up, but everything else about this with momentum resetting as consolidation with the compound breakout tool, that's a pullback signal. We hit resistance, weren't to break above it when we had nice bullish signals on the chart. That already was a clue that we would likely pull back. Now the question is, can support hold? If it can't, then we might get more of a move to the downside off of this. But otherwise, everything to me still just looks like consolidation, and that's basically where we're at right now. More than likely, we won't see a move until earnings itself, right? Unless something is a bit bigger of a catalyst than whatever that news was this morning that you thought it might rip on. It's likely going to stay in chop until that bigger news event. That way they can have a good sense of how did the earnings actually do this quarter, and more importantly, probably what they're looking for is what is the guidance that they have for the next quarter and the remainder of the year. And depending on how that usually goes, can typically be how the market reacts positively or negatively to the announcement. A great example of the chart showing a possibility of this happening actually came in last year. For those of you who remember us trading this, Tesla $200 price level, which is this level right here. And this is a level that's been in place for a couple of years now. So usually it ended up being a pretty good price support level. Every time Tesla went down and tested that $200 price level, it held a support, it would bounce back up. But then go to the end last year, we actually had a switch where we finally broke it, bounced back up to test it as resistance, failed to break above it. So we moved lower, had a second test of testing it as resistance. That started to fail. And so what did we have here? We were in a bearish trend. Momentum had reset towards the zero line. Great situation that when it doesn't cross above the zero line and then starts to pick up red bars, that's a really nice bearish signal. We have a bearish signal in the compound breakout tool. We had a squeeze setting up, Bollinger Bands were starting to open. So there's all of this technical analysis here telling us that Tesla's likely going to roll down, at the very least, go down and test the prior lows. But certainly if it breaks it, then I would anticipate the squeeze to fire for a trend to the downside. And then what ended up happening? Well, the whole situation with Elon and Twitter, right, happened. And I think he did some final selling here. And that news, right, that a news event ended up being the catalyst to help this move. But the technicals were already cluing us in to that possibility prior to the event. So that's what I'm looking at here. I do apologize if I'm breaking up on the sound. It does is at least we'll go through properly. And then Chad is mentioning, I kind of dig these longer term trades. I know this isn't an ideal market for those kind of, right? You give yourself a better ability to serve. So I got to say, I missed ability from last year. Great setups to where it was really nice to be able to not have your risk out there overnight. So pros and cons, I guess, to both. But it's all I really had to go over this morning. If you guys have any other symbols that you want to look at this morning to check out, Tesla, of course, just because we're on it now, does look like it's continuing lower. It's not trying to break back above the 100 period simple like it was back here. Of course, we are the announcement from earnings. Bollinger Bands are flaring open. We have the bearish signal on the compound breakout tool. Momentum is bearish with room to move lower. And then our squeeze has started to fire. So all of that is looking pretty good to potentially try and move to the downside. If you see these alerts down here, all of these are little gaps that are technically still valid. So as we work our way lower, this first gap here around 146 might make for a good target to the downside for anyone who has been looking to play Tesla short. Alex, good morning to you. And then would appreciate my thoughts on MDT. Absolutely. Let's pull them up. So MDT had a nice bounce to the upside. So it was stuck in some consolidation here. Unlike Tesla, where we momentum how it went up towards the zero line, never crossed above it, and the bars, which is usually a good bearish sentiment. Here we had the cross above the zero line, which usually leads more to a bullish trend. And so you can see that's what started to happen here. We broke the ATR trailing stop. So that's another good sign. Bollinger Bands are flaring open. And then the squeeze, of course, down here started to fire. So that all helped with this bullish push to the upside. Now, I know we've talked about this in the Profit Recycling Mastery before, and I believe we've talked about it during $500 challenge updates as well. But a clue that the price might continue to move in your favor, even though it might seem like a big move for the day, is when the underlying price exceeds the third deviation Bollinger Band, and that is that outside blue line that you see here on the charts. Now, this one is also coupled with the squeeze was still solid and starting to fire, so that helps it out too, I would say. And of course, room on momentum. But basically, when the price exceeds the third deviation Bollinger Band, there's a good probability of two